You know, the stock market, it feels like this huge, complicated thing, right? Like it's designed to keep regular people like us out. But what if I told you that's not true at all? What if it's actually the single most powerful tool for building wealth, and that you can start using it like today? Let's break it down. Simple as that.
All right, so here's how we're going to tackle this. We'll start with the mind-boggling amount of money we're talking about, then we'll completely reframe how you think about investing. After that, I'm going to show you the one simple tool that lets you beat the pros. We'll walk through exactly how to make your first investment, cover the big mistakes you need to avoid, and then we'll get to the real magic, compound growth.
Okay, so let's get right to it. Why should you even care about any of this? Well, because there's this massive gap, a huge gap, between the incredible wealth being created out there and the people who are actually getting a piece of it. And you know what? Closing that gap for yourself, it all starts with understanding one giant number. $58 trillion. Let that sink in for a second. That is the total value of the US stock market. And look, that's not just some number on a screen. It is a massive, real-life engine creating wealth every single day. So the big question is, who's actually cashing in on all that? And the answer, honestly, might shock you. It's a really small group. Get this. The wealthiest 10% of Americans, they own 89% of all stocks. Now listen, this isn't because they have some secret key or special access. It's because they get the rules of the game. The real barrier here isn't money, it's knowledge. And just look at what it costs to not be in the game. Imagine you put 10 grand in a savings account back in 1980. Fast forward to today and you'd have about 47,000 bucks. Sounds okay, right? But with inflation, your money is actually worth less. Now, what if you'd put that same $10,000 into the stock market instead? Well, that would have grown to over $870,000. That's the difference. That's the power we're talking about here. So, how do we tap into that power? It starts with a huge mindset shift. We have to stop thinking about this like it's a casino. This isn't gambling. It's not about trying to hit the jackpot. It's about something much more real. It's about ownership. Yeah, a stock is not a lottery ticket. It's a tiny, legal piece of a real business. When you buy a share of a company, you literally own a piece of everything it does. Its profits, its buildings, its ideas. You become a part owner. And places like the New York Stock Exchange or the NASDAQ, think of them as just the marketplace. They're just organized spots where we can all buy and sell these little pieces of ownership. It's like a giant regulated supermarket for companies, making it super easy for anyone to get involved.
Okay, so we've got the mindset right. We're not gamblers, we're owners. But how do you actually do it? How do you do it without spending all your time researching? Well, it turns out there's this incredible tool that makes it unbelievably simple.
But that raises a big question, doesn't it? Can a beginner, someone like you or me, actually beat the pros? The professional investors on Wall Street with their fancy degrees and teams of analysts? It seems impossible. Well, the answer is what changes everything. Over the last 20 years, a whopping 88% of professional fund managers failed. They failed to beat the simple market average. Let me say that again. They had all the resources in the world and they still couldn't do it. And you know what? That is amazing news for us. It means you don't have to try and beat them. You just have to match the market. And the tool that lets you do that is called an index fund. It's such a brilliant, simple idea. Instead of trying to find the needle in the haystack, the one winning stock, an index fund just buys the whole haystack. It buys all the stocks. So an S&P 500 index fund, for example, just holds a tiny piece of all 500 of the biggest companies in America. Simple as that. So when you're just starting, honestly, the choice couldn't be clearer. With an index fund, you're instantly diversified, the costs are practically nothing, and it's a simple set-it-and-forget-it deal. Trying to pick individual stocks? That's a high-wire act. It's risky, it's time-consuming, and it's an emotional roller coaster. For almost everyone, the index fund is the way to go. All right, enough talk. Let's get down to brass tacks. How do you actually buy one of these things? I promise you, it is way easier than you think. It's a simple 3-step plan. That's it. Step 1, you pick a brokerage. Think Fidelity, Schwab, Vanguard, and you open an account online. Seriously, it takes like 10 minutes. Step 2, you link your bank account and move some money over. You can start with just $1, for real. And step 3, you search for a total market index fund. The ticker is usually something like VTI or VOO, and you click buy. And that's it. Boom, you are officially an investor owning a small piece of the entire US economy.
Okay, so you're in. You're an investor. Now the game changes.
The biggest challenge from here on out isn't finding the right stock. The real enemy, the thing that can really mess things up, is your own behavior.
The great investor Charlie Munger put it perfectly. He said, "The big money is not in the buying and selling, but in the waiting." Wealth isn't built by frantically clicking buttons and reacting to every news story. It's built by patience, by buying something good and just letting it be.
And that idea of waiting is the secret to avoiding the 3 biggest wealth-destroying traps. Trap number 1, panic selling. The market will go down, that's a guarantee, but selling at the bottom just locks in your losses and makes them permanent. Trap 2, chasing what's hot. Buying last year's winner is a proven way to lose. And trap 3, trading based on the news. By the time you read about it, it's already too late. I'm telling you, if you can just avoid these 3 things, you're already way ahead of the curve.
Okay, so you've done the work. You had the right mindset. You're avoiding the big mistakes. So what's the reward for all this patience? Well, it's a force so powerful that Albert Einstein supposedly called it the 8th wonder of the world. It's the magic of compound growth.
And this is where it all clicks. Look at this. You have investor A who invests a total of $60,000, but does it early, between age 25 and 35, and then stops. Then you have investor B who invests 3 times as much, $180,000, but starts just 10 years later. So who do you think ends up with more? By retirement, investor A, the one who put in less money but started earlier, ends up with over $130,000 more. That's compounding. Your most powerful tool isn't the money you have, it's the time you have.
Look, the stock market isn't some secret, exclusive club. It's an engine for building wealth that's open to anyone who has discipline and patience. We've just seen that the tools are simpler than they've ever been. The knowledge is right here, right now. So really, the only question left is, what are you waiting for?